Hello, and welcome back to our limited series podcast, Fintech in 2025, Where the Industry Goes Next. This series is sponsored by Marqeta, and today's episode, episode 4, is where we bring it all together. In prior episodes, we've talked about regulation and interest rates and new infrastructure. We've done deep dives into credit cards, BNPL, and the various ways those products are becoming fused together. But where's the industry as a whole going in 2025? What trends and technologies for the next year should we be most excited about? Which should we be most dubious of? What ideas in fintech are we still not talking enough about? Today's episode is a fun one, I'm going to be honest. We recorded it at what I guess you'd call a hybrid restaurant/nightclub inside the Venetian Hotel in Las Vegas during Money 2020. Literally, there was a DJ playing music who we forced to record scratch so that I could get on a microphone and shout, "Who's ready to do a fintech podcast?" Now, as you might imagine, many of the non-fintech folks who were in the club left at that point, and I can't really blame them for that. However, those who stuck around were treated to an awesome conversation between myself and a rotating cast of guests, including AI experts Jenny Johnston of OpenAI and Fouzi Husaini of Marqeta, my fintech influencer friends Simon Taylor of Fintech Brain Food and Lucinda Shen of Axios, and advocate of decentralized finance and spicy takes, Tony Tom of TBD. I really can't do justice to just how fun and interesting these conversations were. So rather than try to describe them more, I'm just going to drop you right into the conversations. So without any further ado, here is episode 4, the final episode in our podcast series, Fintech in 2025.
Hello, and welcome to the Fintech Takes podcast, a very special live edition from Money 2020. That is the energy we were looking for. Thank you. It has been one full day of fintech content, and we're going to round things out with a little optimism for fintech because we have fintech fans in the room. Yes? All right. So you heard it. Everyone is very enthusiastic about this industry. What we are going to do is make some bold predictions and wild guesses about the future of fintech in 2025. And to do that, I have an awesome rotating cast of wonderful speakers. So please help me welcome our first set of speakers. We have Jenny Johnston from OpenAI and Fouzi Husaini from Marqeta. Come on up. Woo! Okay, so each of our speakers are going to get the same 3 questions from me. But given that we have OpenAI, and given that we have the Chief Analytics Officer, Chief AI Officer from Marqeta, I feel like I have a hunch what they're going to talk about. So my first question is, give us your most exciting or bold prediction for fintech in 2025. Jenny, you get the honors.
Okay, I'm going to take this question in the bold category.
Bold.
My bold prediction for 2025 is that incumbents are going to beat fintechs to AI adoption.
Whoa! There's not a lot of bankers in the room, or you would have gotten a bigger cheer.
I know.
No, that's a good one. Expand.
Banks have some budget right now. Banks have data. Banks have a lot of things that are incredibly manual, repeat, rote, unstructured. A lot of teams that could be far more effective and efficient. And from the conversations that we've seen so far, there's a lot of fintechs who are really trying to figure out different use cases, whereas in banks that we're talking to, they're really willing to adopt. We're actually seeing conversations move far faster with them. So,
wow. Moving faster. That's a great prediction. Thank you. That was wonderful.
Let's see.
Okay, that's a great one. Same question, Fouzi, to you, please.
All right. Well, I tend to be a bit more practical in my predictions. Not that yours wasn't, but my prediction is going to be that in 2025, fintechs are going to go all in on AI agentic workflows for their operations efficiencies.
Agentic workflows. All right, so I have to ask a quick follow-up, which is I'm the dumb person on stage. Explain what an agentic workflow is to me, please, real quick.
Yeah, so an AI agentic workflow is breaking down a complex problem, like for example, when a customer calls into a fintech and has a chargeback. And now there's a whole long SOP they have to follow, which could take hours, days, weeks, months. And so breaking those things down into small pieces that you can have an AI go and execute those individual tasks with a workflow that's guiding it through the system, and being able to automate all of that and remove the agent from having to go through the drudgery of those types of tasks and let them work on things that are much more higher impactful.
I love that. I love that suggestion. I love that prediction. All right. So my next question is, and this is not a trap, I promise. What one fintech thing do you think is overhyped going into 2025?
AI.
I wasn't trying to trick you. That wasn't a trap. All right. Expand.
I think a lot of people get confused that our models feel like magic, so they treat them as a magic wand that can solve all of their problems.
You're telling us that's not true.
It's not true, because fundamentally, to solve any problem, you need to first and foremost understand what the problem is, what your customers need, what the business case is. And then there's oftentimes a really wonderful AI application, but oftentimes I think AI gets trapped in this cycle of, oh, it can solve everything for me. My board has told me that I need AI, so let me just sprinkle AI throughout the company. And we're certainly happy to work with people to help them get there. But fundamentally, it always has to start with what is the specific problem you're trying to solve and what is the technology. AI can be a magic technology, but it's about finding the right use case.
Okay, you heard it here. AI is the most overhyped trend going into 2025, according to Jenny Johnston at OpenAI. All right, Fouzi, how about you? You want to double down?
I'm going to double down, but I'm going to go in a slightly different direction. AI being the existential threat to humanity. I think that is overhyped. And we're actually seeing data that indicates that is being now cooling off. Now, last Wednesday happened to be the 40th anniversary for when the Terminator came out.
Whoa! Big day in AI world.
It's a big day, but I think we're far away from that eventuality.
I love that Fouzi is just taking my talking points and I get to play the counter. So thank you so much. I swear this wasn't a plant.
I'll tell you what we'll do. We'll flip the order for the last questions. Does that sound fair? All right.
Sure.
Last question is, what is one thing in fintech for 2025 that's not on everyone's radar, but should be? What are we not paying enough attention to? And Fouzi, you get to start on this one.
I don't know if other people are paying attention to this, but I really like the idea of AI plus fintech and then embedded into multiple different domains. So like, for example, if you think about healthcare, why can't we have an AI fintech platform that you could embed into healthcare and start forecasting out healthcare costs, insurance costs? I think there's a whole interesting domain there. You go to education, you go to biotech, so many different use cases where AI can be much broader than just fintech.
Okay, that's a great one. If you mention embedded in this room, you're going to be a popular man. So that is an excellent one. All right, and Jenny, bring us home. What is not on everyone's radar that should be?
Taking customer support and expanding it to customer experience.
Yes, I love this one.
Which is perfect to follow on from what customers want. Customer support is one of the highest velocity places to build trust with your customers.
Totally.
And it is such a ripe opportunity to expand that, to think not only about solving customers' problems reactively, but starting to build a proactive relationship with your customers. And I think what we will start to see in 2025 is people adopting AI into a broader relational management part of their stack, and thinking about what an appless fintech AI experience could look like, where your gateway into your financial life is fundamentally an agentic relationship that then will channel you to the product downstream. We're already starting to see some grassroots, some of which you've already talked about on Fintech Takes, that I'm really excited about. I think people are sleeping on this opportunity.
I can't wait for 2025. Please join me in thanking our first group of speakers, Jenny and Fouzi.
Thank you.
Thank you.
That was awesome, guys. All right, next up, we have true fintech celebrities, influencers, newsmakers, newsbreakers, Lucinda Shen from Axios. And the one, the only, the author of Fintech Brain Food, Simon Taylor.
Lovely to see you, Alex.
It is lovely to see you. It's so strange running into you both at the only fintech conference that everyone in the world goes to.
How about that? How strange.
I know. You stand out in the crowd. You guys are famous. I can't wait to hear your thoughts on this. Same set of questions. And Lucinda, I'm going to start with you and we'll work our way down. Give us your most exciting or bold prediction for fintech in 2025.
Okay, I'm going to be on brand for a journalist and be a Debbie Downer, I guess, after that amazingly optimistic conversation. My prediction is that there's going to be a wave of zombie neobanks that come through. And I think these are trends that we've all been following here, right? There's more compliance happening. It's hugely costly for young startups. Only large ones with very mature, lots of capital can really handle it. A lot of them aren't going to buy these neobanks because they're just simply the customer acquisition cost isn't worth it. The cost of acquiring those smaller neobanks isn't worth it. So unfortunately, I think you're going to see just some neobanks start to peter out more so than we've already seen.
That is unfortunate. It is definitely, though, a continuation of a trend we've been seeing. And I think that is a very wise prediction. Thank you. That is wonderful. Simon Taylor, I have a hunch that you might go in a slightly more optimistic direction, just knowing you as I do.
Yeah, but hear me out. I actually think embedded finance will have some big winners and some big losers. And the big losers will be the consent orders are going to get worse before they get better. They're going to get so much worse. But hope springs eternal, because what follows the consent orders is an industry that's maturing and getting better and better every day. And the big winners are going to be those that get compliance right. Here's my boldest bit of the prediction. You know what follows consent orders? Forced migrations. That's gonna get nasty, people. And we need to get better as an industry. And there are some early signs of who those winners are gonna be. Last bonus prediction.
Go.
Big banks get into embedded finance in a big way.
Yes. All right. I like that. Give him a hand for both those predictions. Those are wonderful. Fantastic. All right. Simon, I'm going to start with you and we'll go back the other way. What is one fintech thing that you think is overhyped going into 2025? I will give you bonus points, sir, if you do not say AI, but you can if you want to.
No, I actually think 1033.
No, my favorite topic. How could you do this to me?
Because 1033 doesn't fix everything. We still got a lack of standards. We're
Fair.
Still going to have a lot of fraud. We're still going to have all of the issues we had. And we've still got lawsuits and everything going wrong. The fact that the rule got made does not mean you've got open finance now. It's overhyped. We've got work to do.
Wow, that is a great one. And I will say, I do find it a little bit strange that we're complaining or rejoicing over the rule being passed to formalize a thing we already have. It's a very strange duality. So I will +1 that. That's a very, very fair overhyped trend for 2025. Lucinda, how about you?
Yeah, I'll say B2B. I think general B2B, yeah.
B2B,
wow.
wow.
I will not say all of B2B, but I would love to see B2C come back.
Yeah, me too.
And I will also say on the B2B side, I feel like there's going to be there's a funding rationale to this, right? A lot of B2B companies, not all of them, have very long sales cycles. That is great if you end up with like a huge account. But the revenue, it comes in steps, right? It doesn't come immediately.
Right.
For funds that need DPI, that need returns, a lot of companies are venture-backed. Those long sales cycles, right, it might actually lengthen the amount of time that you have to hold on to a company. And that doesn't work out always for a venture capitalist. So I think that there could be a trickle-down effect there.
I think that's very fair. I mean, the B2B thing does remind me of B2C 5-6 years ago, where it's like, this is amazing. We all need to get into this. And if everyone is saying this is amazing, maybe not.
100%. And the trend
Office
is flip,
of the
right?
CFO. Yeah.
I mean, that's already starting to, abate a little bit, right?
It's
with
kind of, it's become like a meme almost that sort of loses any meaning. All right. That is very fair. All right. Last question. What is one thing not on our radar that should be on our radar? Lucinda, we'll start with you.
Oh, God. Let me think about this one. I didn't have this one prepared. I would say what we don't have on our radar, I would say one thing that I haven't seen a lot on the radar, and I'll take the macro view on this.
Yeah, please.
private debt in general. I think a lot of
Yeah, you're talking my language now.
Yeah, just private debt in general. Oh, sorry, were you gonna take that? I just feel like, I've had conversations with private equity firms, with like bankers who see this higher level view, and they're genuinely starting to get concerned about the liquidity, right? There's a thinking that there's a lot of liquidity in the private markets. It's not so true. And all it takes is a small trigger. There might be capital, but there might not be enough kind of, once the assets start going down, it has a follow-on effect if that does happen. And so that's one thing that I really think should be paid more attention to. I'm kind of shocked, speaking with some of the folks at this conference, that hasn't come up more as kind of this macro level economic potential concern.
Go ahead.
And also, when you consider Basel III endgame, like the banks are worried, the banks are in trouble. That completely agree. Wow, we need to write the piece on that because,
I totally agree. And I will say the private credit thing that has been striking me most recently is it started as an industry where it's like, don't worry, this is, these institutional funds, there's no leverage, there's no risk taking. Now there's leverage, right? Now we see private credit funds getting loans to buy loans as an asset. That is scary.
Yes. And anytime that someone says this is riskless, I've seen assets now that are called low risk private credit. That's when that's not a good situation to be in.
Yeah. No, that is very bad. The whole history doesn't repeat itself, but it rhymes thing is coming to mind as we go through that. All right, Simon, give us one other one, I guess, because that might have been where you were going.
Scams.
Okay.
We are in the middle of a scamdemic, my friend.
Yeah.
It is sad but true that it is becoming the number one policy issue. It's something that you're seeing headlines about pensioner loses their life savings. But as an industry, I see fraud come up. But if you speak to anybody in the payments industry, if you speak to anybody that's close to fraud, scams. It's not a fraud thing. It's a scams thing. It's authorized push payment fraud. And as we get into pay by bank, we're going to see faster payments means faster fraud.
I love it. Scams, I can +1 on that. That is the number one policy issue lurking under the surface. It hasn't quite broken through the surface yet, but everyone I talk to, banks, fintech companies, the government, law enforcement, everyone is privately coming together at a table and talking about how we can fix this. And the problem is there's a lot of finger pointing. So it's not going to be easy for everyone to get on the same page about how we address this. You guys in the UK are leading ahead of us, so we get to learn from you a bit, but we're going to have that same conversation
I like
here.
to joke, I'm the ghost of fintech future, and I got some bad news.
That is a wonderful place to stop. Simon and Lucinda, big round of applause. Thank you. All right, we are going to end with Tony Tom of TBD. Give him a big round of applause. Last speaker, here we
thank you,
go.
everybody. It's awfully kind of you. Is it because of my name? Because my name is so cool?
It's your name. Well, I mean, you're talking to Alex Johnston, so
sorry.
I kind of think I have the market cornered on a cool name. All right. So, Tony, first, before I let you answer these questions, for those who don't know, what is TBD?
What is TBD? Okay, TBD is a block company. Block used to be called Square.
I remember that.
Yeah, when that was the thing a couple of years ago. TBD is a decentralized ecosystem company, right? So we're Block's attempt to build a decentralized protocol for money movement and for identity. So we've got a trust framework, which makes that all secure. But ultimately, what we're looking to do is connect fintechs around the globe so that they can share value more efficiently.
I love that. Okay, so same set of questions to you, sir. Give us your bold prediction for 2025.
Bold. Okay, the base answer is not that bold. It's going to have to do with stablecoins. But it's a total assets kind of moved and on chain. I think we're going to flirt with $40 trillion next year.
Wow. That seems like a big number.
It seems like a huge number. But when you put it in the context of 190 trillion that moved cross-border, and I'm speaking in cross-border terms. So 190 trillion moved last year. I think we're going to break 200 trillion probably in 2024. And we're already, it might not even be that bold if you look at Q2 and some of the numbers that are coming in. So I'm just really stoked. I think that stablecoins give a incredibly efficient addition to instant settlement in a way that like the old systems just can't do and can't compete. So here we go. Buckle up.
I love it. I also love that is a both bold prediction and one that is so incredibly sober relative to previous Money 2020s I've attended. So thank you.
You're
appreciate
welcome.
that.
Absolutely.
That I really do
the
appreciate.
line there.
Yeah, stable coins are sexy. Okay, all right.
I know.
Next one. What is one thing that is overhyped going into 2025?
Okay, this is a little controversial, I think. I was walking around the floor earlier today, and I saw a proliferation of identity vendors.
I saw the same thing.
You saw the same thing.
I
If
did.
I think back to previous Money 2020s 5 years plus ago, there was like 5 vendors, and there's probably like 65 vendors now.
Yes.
I think my mind says that is probably not right. Something is out of sorts here, and I think it's because we're focusing on like maybe a pill to take that's going to solve all of our fraud and like security problems, when really what we need to start to look at are more decentralized solutions. You see where I'm going with this? That allow for data to actually be shared amongst financial institutions. Sincerely, I think that like if we continue to insist that everything remains siloed, company by company by company, what we don't get is the insights. Or the insights get controlled by aggregators that we actually don't benefit from directly as companies.
So despite being the occasional skeptic of the term decentralization, when it comes to identity, I actually totally agree with you.
Okay.
And I think the way I would frame that is, if someone tries to insist on winning identity, we all lose. Is that fair?
100%.
Okay. All right.
Absolutely.
So, final question for Tony. Please give us something that's not on our radar. So, no stable coins, no AI,
Sure.
no digital identity. Give us something we're not thinking about that should be on our radar headed into 2025.
Sure. I think it's something we used to talk about a lot, but we've stopped talking about it.
Okay.
And that's stop talking about. There we go. That's the global South. I think that there is still an incredible amount of innovation and just like tenacity that's happening in those markets. And I think that we need to go back and remember just how solution oriented they are. So when we think about our identity problems, when we think about the fraud, they face those kinds of things on a scale that we can't even possibly imagine across Africa and across Latin America. And I think that we could actually take significant cues from them and integrate those learnings into the things that we build to make the whole world more secure.
I love that answer. Somewhere Simon Taylor's trying to rush the stage to get up here and add his 2 cents on these ones.
I want it. Bring it.
Those are great. Please join me in thanking Tony. That was fantastic.
Cheers. Thanks, Alex.
Thank you. All right. I hope that provided a vision of both bold and slightly less bold things to look for in 2025 in fintech. I could not be more excited about the future of fintech. Thank you all so much for this. That is the end of the podcast. Thank you.
Thank you for listening to this episode of FinTech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love FinTech Takes, please tell a friend.